Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Tuesday, March 10th, and my name is Raleigh White, and I'm coming to you live from a chilly, rainy day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a continuing focus on using the volume weighted average price indicator, otherwise known as the VWAP, to find and to manage trades. He's going to begin today's session by giving us a midday market analysis and his updated stock watch list. And then we're going to pivot. He's going to share with us how to set up and trade the anchored VWAPs. He's going to talk about the key levels that you need to use for setting up anchored VWAPs. He's then also going to show us how anchored VWAPs can be used to find value areas and how the anchored VWAPs can also be very helpful to confirm A-line strategies. And finally, folks, we're going to complete the picture talking about how market internals are a core part of our analysis of the markets as well. So it's a great session that we have lined up for you. And if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that I have opened the chat to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Always keep to the topic, no political discussions whatsoever, and just limit the amount of chit chat between you and someone else because this is not a chat room. This is a place where we've really all come to listen and learn from what Roger is going to be sharing because, after all, he's here to give us an edge in the market and to help us all become much more consistent and confident in our trading activities. Now, for those of you that were with us this morning at 8 o'clock Eastern Time, for Roger's pre-market briefing, we noted that there were several key catalysts that we needed to be aware of as we got ready for the open of the markets. We noticed on the Magnificent Seven that Tesla was up 1% coming into the open. In chips, Micron was up 1%, Lam Research was up 2%, and TSM was up 1%. So this is a nice little turnaround from earlier in the week. On the tech front, we noted that Hewlett Packard was up 2%. And on the energy front, crude, now down 6%, was bringing energy stocks down with it, including Oxy, which was down 2%, and ExxonMobil, that was down 1%. On the international front, we noted that the Euro stocks were up 2.4%, Shanghai was up 0.7%, and the Nikkei was up 2.9%. So we definitely had some positive tailwind coming from the international markets. On the Fed front, once again, a very light day with one key report scheduled to come out, and that was existing home sales. Now, for those of you that asked the question, so Raleigh, tell me, what am I supposed to do with these catalysts? Why are they important? Well, from Roger's perspective, any information that is either known or will become known during today's trading session and is not yet priced into the market, those represent volatility flashpoints. And those flashpoints, we need to be aware of them, these catalyst areas, because it could have an impact on our decision potentially to place trades that might be impacted by these catalytic moves. So once again, that's why we like to use those. Now, for those of you that, once again, were this morning, Roger did share what his pre-market stock watch list was concerned. Kind of light today, just 12 tickers that he was looking at, 5 to the short side and 7 to the long side. Now, let's be clear about what it means when Roger has a stock list. Every morning, he takes a look at stocks that have the potential to be stocks that he might want to trade during the day. And so from that standpoint, he identified 5 shorts and 7 longs. Now, these are not automatically trades that he's going to take, but if these trades set up the way he hopes they will, there's a strong possibility that he'll take a trade in any of these tickers and then probably post those in his trading pit or in one of his other premium alert services. So once again, let's be aware, this is a watch list. Finally, folks, as far as Roger's pre-market, pre-open thoughts were concerned, we did notice that the futures indices were kind of cooling off and they were mildly lower coming into today's open. We did see, however, that the put to call ratio was significantly unbalanced with puts very, very high up in the range. And when Roger sees that, he basically says this is an overextension and he's expecting it to pivot around as calls become more prominent or prevalent, if you will. As far as the VIX is concerned, the VIX was moving lower, but it was still sitting there above 25. The way Roger looks at the VIX, anything above 20 is a concern. Anything below 20 is a normalization in the market. And to that point, he said, if you want to know if the market has fully internalized what's going on in the Middle East, that will happen once the VIX drops below 20. So the fear factor is still up there at 25, but it's down. It was near 30 yesterday, and it's come down to 25. As far as sector rotation is concerned, we're starting to see a nice little rotation in favor of speculative stocks. And that's good news because typically those speculative or interest sensitive stocks, they tend to give the market a real impetus going higher. And to that point, he noted that the SPY, the QQQ, and the Dow were all sideways, but they were up in their range, just sitting below resistance. And from as far as momentum is concerned, it's up today versus yesterday as the number of companies that were posting 1 month lows had fallen off significantly. Yesterday, midday, it was up over 700, almost 800 companies in that range. And this morning, coming into the open, it was in the low 100. So that's a good indication. Bottom line, Roger was cautiously optimistic about what he sees in the markets. He feels like the bulls are really poised to make a move right at resistance and to move through that. Always, though, he said, look, folks, we have to keep an eye on the VIX and the crude. So once again, from his standpoint, looking for the VIX to fall and for crude oil prices to fall, because if that happens, once again, it's going to give some real impetus to the market moving higher. He also said, let's keep an eye on the number of companies that are making 1 month lows. So those are the things that he's focused on. But bottom line, cautiously optimistic about what he sees and expecting that we're going to see some positive movement in the markets today. So we're delighted to have you all here with us today. And in that regard, Roger's put together, I think, a pretty terrific agenda for today. He's going to be giving a continued focus on the volume weighted average price indicator, otherwise known as the VWAP, and how to find and manage trades using this indicator. So he started this education yesterday and he's continuing it today. Now, he's going to begin by giving us a midday market analysis and an updated watch list as to the key stocks he's got his eyes on. Then he's going to pivot, and we're going to talk about how to set up and trade the anchored VWAPs. He's going to share with us those key levels that we need to use for setting up anchored VWAPs. He's then going to show us how we use the anchored VWAPs to find value areas and also how the anchored VWAPs can be used to confirm some of the A-line trade setups that we see. And finally, just completing the picture, we're going to reintroduce the market internals because that's a key component of the way Roger likes to assess the markets as he considers taking trades. So once again, we have a pretty fantastic agenda set up. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone, but we do have some ground rules. Always be kind and supportive in your post. Please keep to the topic, no political discussions whatsoever. Keep those side conversations, that chit-chat between one or two of you to a bare minimum, because this is not a chat room, folks. This is a place where we have come to listen to what Roger's going to be sharing with us, because after all, he's here to give us an edge in the markets and to help us become much more confident and consistent in our trading. And with that, let's say hi to the team. Good morning, Matt. Hi, Roger. Good to see you, Matt, right off the bat. Killer trade this morning in the SPY, my man.
It was a great trade. Great trade.
And I love the way you managed it and the way you communicated it as things were rising, what you were looking for, etc. Textbook. Roger, always great to see you, my friend. And once again, I got to say, in your morning sessions, you basically say, guys, here's kind of like what I want to see. And you know what? More often than not, that's what happens. And I know you're not a predictor of what's going to go
No,
on. You
no.
just basically say, hey, based on what I'm seeing here, I'd like to see these things happen. And if they do, I think we're going to start to see a little bit of positive movement in the markets. And Roger, I think so far, you've pretty much gotten everything that you've asked for.
Well, I think so. For the most part, yes. By the way, welcome everyone on YouTube. Let me just say hello to everybody. Hello, YouTube. Welcome. I don't want you guys feel like you're on your own. We always have about 100 people showing up on YouTube. Matt, good morning to you.
Morning.
First time I get to see Matt today. I talked to him today, but I haven't seen him today. You may want to block out in the future or put a shadow on that window behind you.
I'll
You're,
I'll close the blinds.
yeah, you're going against, yeah, it's
One second.
creating, yeah, yeah. And Raleigh's back on at the exchange.
I
Always
am
good
at
to,
the exchange. It's noon and I tell everybody leave. you know, go grab lunch because I need to focus on what Roger's going to be saying. But yes,
exactly. Exactly. Perfect. That's much better, Matt. Much better. All right. So let me just kind of show you guys. You could see yes, of course you could see my screen.
yep.
So let me just show you a few things that I'm looking at. And again, there's no change from this morning in my analysis. See this right here, the crude oil right here. When we're almost at the low, we're almost at the 8-day EMA. And notice this bar didn't even, this does even more so now than yesterday. This looks like a capitulation, okay? This is really good that energy prices are not even above this level and that we're near the bottom end. What would be really nice, and I don't think we're going to get it. I don't want to. What's that? What's the curb your? I want to. I don't want to. I'm going to curb your enthusiasm. Okay. I don't think it's going to be like a day or two. I don't think it's just going to be up or down. I think we're going to kind of consolidate here a little bit, kind of maybe have a couple of bumps in the road. But I think this was the capitulation. I think this scared our country, our president, uh, the world into thinking that if we don't put a cap on this, energy prices are just going to go through the roof. So and that's really inflationary. And then President, well, he'll do it anyway. He'll blame the Fed, but then it's, hey, you don't want to have inflation, don't start wars. It's just the way it works. But again, I think I still believe this war was a good idea. I think eventually we would have needed it no matter what. I think it was inevitable. And I think it was the right thing to do. Anyways, just my 5 cents. Um, my 5 cents. Anyways, this is the level on crude oil we need to break. It's 77.61. Okay. We really do need to break that level or at least start coming near that level. I'll take what I'm seeing right now. This is fantastic, but I'd really like it for us to trade below this bar right here. The 78 level is where the fear really, really started. Like you could see it right here. You could see the catalyst kind of happen right here. And I
Mhm.
want to see it come off that level. Also, I probably used a long-term. Yeah, I used a long-term. Look at price, how price sticks to this level right here every time it bumps. There's something psychological about that 77.60 level. Okay. So hopefully in the next couple of sessions, the faster we come off, the faster we'll see the stock market go higher again. I mean, I know I'm oversimplifying it a little bit, but sometimes it's just that simple. Number two, I kind of feel like I need to, before we get into today's session, I kind of give into today's lesson, I kind of get to give you a little bit of what the market's doing because obviously everybody's focused on this right now. All right, volatility. Remember what I told you above below this level here. Let me actually take this and put it right there so you could see it. But technically, it's actually right here, 20. That's actually you know what I should do? I should take this and actually move it. Yeah, I'm gonna change my
Move
area.
the range down to the 20.
Yeah, yeah,
Yeah.
yeah. I don't even
Yep.
know why. I left it there, but the truth is, every one of these bars, I mean, this is where it's supposed to be. When the volatility, and this is a great. Don't get me wrong. I'm very happy. This is about as good as it's going to. I mean, this is beautiful. But this is telling us that that whole level of fear we had a few days ago is not there. But we're still above 20. Anytime we're above 20, that's danger zone. That is danger zone. Okay, that's a level that's a level where you have to ask yourself. That's where the market is still saying, "Hey, what's going on? What's going on? We're we need to be on guard." That's the level. It's not things are bad. It's whoa, we got to be on the lookout. We got to be on the lookout. So we need to get below that level. And it looks like I mean, I don't think we can be getting there any faster, but we need to continue going down this trajectory. So what I would really like to see before the end of the day, I would like to see this further down, breaking the 15-day and maybe coming a little bit lower. Again, this is just ideally what I'd like to see. I have absolutely no idea what will happen, and I don't pretend to. And if you think somebody knows how to predict the market, run the other way as fast as you can. Now, momentum levels, real quick. Let's take a look at momentum levels. Remember, this is very important. Okay, we're at 100 yesterday. Okay, we came in this morning at 187, and we ended on what's today's date? Today is Tuesday, right? Taco
Yes,
Tuesday.
Tuesday the 10th. Yep.
Right. We ended on Friday at 588, and we came in on Monday, and I told you guys this. I don't think this level will sustain itself. It went all the way down to 700 something. I kept posting it on top. Let me just see what the SPY's doing. And anyways, and now we huffed, we puffed, and we're now at 103.
Mhm.
Which is not high at all. And that's usually what happens. Now, don't expect this to just keep going down. It would be great if it did, but there could be some bumps in the road. Just like right here, you could see one day up, one day down, one day up, one day sideways, and then more bumps in the road. Okay? So again, folks, please keep in mind that we want to see volatility come below this level, the 20 level. I mean, even as it comes down, it's already good, but I want to see it come to this level or below. Once we're below this level, the war will have officially been completely priced into the market. While the VIX is still above 20, the market is still, they're still unknown, which means we can go one way or another. So don't go making big plans just yet. Now let's look at the broad market real quick. I'm here already, and I'm at home, and I have pretty fast internet here, so I'm looking at this through our lens. The SPY, and one of the reasons why I'm not that aggressive right now is because we're right at the 100-day moving average. As a matter of fact, I'm going to show you the TC 2000 in real time right now. This is like 15 minutes delayed. This is in real time. Not that it really matters when I'm looking at daily data, but okay. You see the upper part of it's just clear here. You see this white line right here? The white line is the 100-day moving average. Okay? And it happens to be 682.28. The level I gave you this morning on my SPY was 681.68. By the way, in case you're curious how well my levels work, I gave you this level as the high of the day 3 hours before we got here. Let's see, 8:45, 9:45, 10. Yeah, 3 hours before we got here. So my levels work pretty darn well. The bottom ones too, look right here. And now we're broken. And now if we can't reclaim this back up, we're going to continue going down. And here's the VWAP, which is right next to it. So the next level is 678.42. Let's see if we hit it. Let's see how far down we get. So my concern right now, my biggest concern aside from the war, and this all goes hand in hand, is whether the SPY is going to break this level right here. You see how granular I'm getting with you? This is really important. Why, Roger? Why? Because when the market gets above here, a whole bunch of funds are going to be a lot more confident in buying. And when we get above here, they're going to say, we're above the 50-day. It's time to go long. It's time to go long. It's time to go long. So this is our first level we have to get above, and this is the second level we have to get above. If we can't get above these levels, it ain't going to be pretty. All right? It ain't going to be pretty. Does anybody have any questions before we move on?
Nope, everything's good.
All right, good. I just wanted to make sure, I'm not looking at the chat. You're my eyes here, so Just want to make sure everybody's kosher. So that's the QQQ. That's the SPY. We need to get above. I know you're all like, Roger, it's just a line right here. What's the big deal? It's a big deal.
It is
It's
a
a
big
real,
deal.
real big deal. This is a big deal. This is the 100-day moving average. You're an institution and you buy a lot of stocks before we go above here, you get fired. You buy above here, you get a raise. I know it's silly, but that's how the world works.
Hmm.
Okay. QQQ. Let's just quickly look at QQQ. QQQ is above the 8 and the 15, and the 8 looks like it wants to cross the 15, which is beautiful, but we're still below this level. Let me delete this crap here. Okay. We got to break above the 100. And I'm going to make you a little prediction. If the SPY does not break the 100, the QQQ is probably not going to break the 100. So we got a while to go here, but at least we're in this channel. And by the way, notice QQQ never broke their structure. They never broke their structure. Look, never broke their structure. Mags. What about Mags? Mags never broke their structure. They're in their structure. Now, it's not a great thing because they're just consolidating, but we did not break this structure. The foot remains a foot. Okay? The old Italian boot
Yeah, the shoe.
it remains a foot. Okay? It remains a foot. And we're just sticking to the 200-day moving average, very similarly to how silver is sticking to the 50-day moving average. There it is right there. Okay. So I like the market. I like what I'm seeing. I'm very much encouraged. I'm very, very much encouraged by what I'm seeing with VIX, with this. With this, I'm really encouraged by what I'm seeing. I just want to see this fall off and go below here. You see how it lives here for a while? There's a big liquidity pocket here. I want to get stuck right here, like 18, 19, below 20. And on a 5-minute basis, I don't know, it looks like we're making a little base here. So, but again, I'll take whatever I can get. And USO, by the way, this is the Energy United Oil Fund. That's coming off as well. It really does look like we peaked out yesterday. But don't be prepared for some, some ripple effect. And again, I like the momentum levels. Now, let me give you guys let me give you guys some levels. Let me give you guys some stocks on my short list and my long list, and then we'll move on to my lesson of the day.
Sounds great. Quick comment, Roger. I just
Yes.
really love the way you position the VIX and oil pricing at this current time as almost a near real-time indicator of how the market is perceiving what's going on in the war and the things around that, because it is almost a real-time reflection as to
It
what's
is.
happening.
It's about as close as you're going to get. It really is. It's about as close as you're going to get. If we can't get, this thing is really close, really close to real. I mean, this is like watching add the money options on the SPY in real time.
It is.
That's what you're doing. You're
It's a good
looking at the
analysis.
implied
Yeah.
vol. Yeah, all you're like take add the money options on the SPY, take away everything except the implied volatility, change it into a numeric formula, and that's what you have right there. This is telling us what implied volatility will do over the next 30 days. 30 days. There are some really cool ones, Raleigh. There's a really good one. It's called a medium-term volatility index. I don't even know if they still have it or not, but it looks at volatility over a 90-day period, not a 30-day period.
Okay.
And it's not as spiky. It's not as reactive. It moves more like slowly. And I had a system back in the Market Geeks days when I would use bonds, and all I had was the bonds, the SPY, and that volatility asset, 3 assets. And we were getting 40 to 50% return a year on that. It was called Market Cycle. And we were getting 40 to 50% return, and we were rotating positions like 3 times a year. And then the Greek, either Brexit happened or Greece happened, one of the two, and volatility just went crazy, and that one of those assets went out of business. But I'm always on the lookout. I'm always on the lookout for medium term volatility assets. They make very good hedges. They make very, very good hedges. Just FYI. Anyway, I'll give you a lesson on it one day. You guys will love it. It's something that hardly anybody talks about, but institutions use them all the time as hedging tools. Okay, because they don't do this like the VIX. They don't. They do more like they trend. They could trend like a stock. It's very cool. Anyway, memories, memories, and memories. All right,
Yeah.
let me the things the things that get me hot and bothered. Right, it's
No,
amazing.
it's great. And Roger, so many people have commented red meat, red
Thank
meat. They
you.
love this.
Oh, good,
Absolutely.
good, 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 good. I'm so happy to hear that. Okay, short trades. ACN. That is a very, very nice A line to the downside. That's a very nice A line to the downside, by the way. Also, if in case you're curious why some of my candles are yellow and white instead of green and red, that's because these are high volume candles. Yellow is a high volume candle to the downside. White is a high volume candle to the upside. And I have them both on the 5 minute and I have them here on the daily, just
And
so
a
you
high
know.
volume, Roger, that's where it's what, 15% above or below the average?
20 or 25% above the
Okay,
50-day moving average.
cool.
I think I have 20 here and 25 here, which actually would make sense because here, yeah, let me just take a look.
Yeah,
Uh,
because some people have been asking what's the definition of a high volume bar, and it's more than just above the moving average.
yeah, it's 120% above the 50-day right here. And here I think it's 25%.
Okay.
Yep. Yep, I changed it down here to 20 and here. I'm still experimenting with 20 or 25 to see which ones I like better, but you're not gonna be drastically off by that 5%. All right. All right. So very nice A line right here. Very, very nice A line. Like it quite a bit. And you got good volume here too. Infotech. All right. Next one. And also the stock trends very well. You could see here, nice trend. Looks like it wants to revert back into the trend. Okay. GTLB. Beautiful, beautiful. That's a very nice short right there. That's a very nice short. I got to tell you, folks, I'm giving you guys some real good red meat sometimes, and this is
Hmm.
this is good. And volume is higher right here too. Remember, whenever you see higher volume, very, very, very important. Okay, very important. CPB, Campbell Soup. Now, the fact that the stock is coming down and the fact that this is a defensive stock really tells us that this company or people investing in this company or trading this company are not fearful of a good market or a bad market. They're fear of a potential recession, inflation, excuse me, inflation, which can potentially turn into a recessionary. Um, because usually in a defensive time like war, you would see this moving higher, and it hasn't been. CPZ. Now, this stock is very choppy. This looks like a long short dynamic income trust. I would stay away from this. Forget I even mentioned it, okay?
Yeah, we'll scratch that one.
Now, hold on. Look, PC. Yeah, forget it. Forget it. Scratch it. Now, this one, don't scratch. This is a good one. This is a financial company, insurance company. You got a little breakdown here of price. It's very nice. Very, very, very nice. Okay.
So, Roger, some people have commented that back on CPB Campbell's that they have earnings tomorrow. Does that change your thoughts about this as a short?
Yes, it doesn't change my thoughts as a short, but I would not touch anything that has earnings at all. And remember, I don't screen through earnings when I do this with you guys. When I'm looking at trades, when I'm looking at trades, I have my earnings right here. Okay. I have my
Okay.
earnings right here. So I see them right away as I flip through this. As I flip through this, I have them right here. But as I'm looking at a chart, because and I'll tell you why, because I know a lot of people don't pay attention to what I say and they trade earnings, which is something you should never do. But look, I'm not your, babysitter. If you don't want to listen to me and trade earnings, God bless. Let me just take a quick look at what the SPY's doing right now. SPY's doing absolutely nothing right now. As a matter of
Hmm.
fact, it's between my levels that I gave you this morning. And
Hmm.
again, look how well we couldn't break this level, went back up, just kind of consolidating. Matt, I imagine you're nothing right now or long?
I'm actually short up the top.
Short right here?
Hmm.
Mm-hmm.
Right here? Did this get you?
680. I'm short from 681.13.
What time are you short from?
I am
11:20,
short from,
11:23.
yeah.
Oh, you've been short for a while.
Yep.
Yeah, once we failed the double top, I went short.
Oh, so from what level are you short from?
681.13.
So from right here.
Hmm.
That's
Yep.
beautiful. I didn't know you were short. I knew you got out of the long, but I didn't know that you went. I didn't know. I thought it was recent. Anyway, good, 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 good. I'm glad you didn't fall for the banana in the tailpipe right here. Okay, all right. I got to watch this guy like a hawk. Even when I'm not around there, I got to watch him like a hawk. He's frisky. He's very frisky. Okay, so let's go now. Let's go to our last short, NSP. Let's see. Did we? Yeah, we actually did break this barely, but we did break this consolidation. I would feel much better going short near the low of the day, but we're officially out of this compression. You could see it actually right here. I don't like the fact that it's just the wick here. So I would if I consider taking the short, I would wait for the end of the day and I would wait for price to get to this area right here. Okay. And folks, I have my chat closed, but let me just say good morning to everybody or good afternoon. Thank you guys for being here, and everyone on YouTube, welcome, welcome, welcome. All right, let me now look at the long side. Okay, COHR. What kind of pattern is this, folks? What kind of pattern is this? Oh, it's an A line. That's right.
A line, exactly
An A
right.
line. Put a VWAP up here. Yep. We'll talk about this in just a few minutes. We'll talk about VWAPs. AXTI. This is a beautiful setup. I gave you this stock on my watch list. By the way, I'm actually going through my watch list for the pit right now. Most of the stocks are the long, not the shorts, but the longs were. These are all stocks that I gave folks in the pit as watch list stocks, not trades, but watch list stocks. Let me see how the option was a little. Actually, it's not that bad. It's a nice look. It's a semiconductor stock. LASR. LASR. Beautiful chip stock. Also a A-line stock. Very nice. Very nice. People are catching on. I love it. Sienna. I almost went long this stock today. I almost went. If Richie didn't give me the stock Richie gave us a stock today. It's this stock right here, CF. I'm long CF right now in the pit. It's Richie stock. But if I didn't go long this stock, I probably would have gone long Sienna. I really like Sienna. And next one, VRTX. A little choppy, but nice look. Nice look. Micron. I like Micron right now. Let me check the VWAP real quick here. Yep, we're above the VWAP. I'll talk about that in a few minutes. Actually, CF was the next stock on my watch list, so yeah, here it is again. Made a swing high. Yeah, the all-time high? No, made a swing high and pulled back to the 8-day. Very, very nice. And let's see if it continues this trend. And last but not least, Johnson & Johnson. It needs to get a little bit higher. It needs to get above this area, 245. But once it does, it'll be ready. Good. I'm glad to
That's
hear
been a
that,
favorite
Cyrus.
of yours for a while, J&J.
Yeah, yeah, and it crapped out for a little bit, and now it looks like it's coming back. Healthcare stocks don't have that much uh, correlation. Thank you, Richie. They don't have that much correlation to acts of war or things like that, because I mean, people are going to still be taking their medication and doing that. Can you look at AMD? Yeah, I'll take a look at AMD. Actually, I haven't looked at one for a while. No, no, no. AMD's got to get here. You see, you got a nice gap here. You got a nice consolidation here. AMD is a really nice stock right now to do. Matt, where are you? Can you make a note? Maybe make a note about a credit spread on AMD, would you? Because those option spreads are really, really good. Google. Yeah, Google's coming back nicely. Very nice. Very nice. Yeah. Anyways,
And
AMD.
Roger, if you've got a second for one more stock,
Yeah.
GEV.
GEV. Yeah, I do. It's a beauty. It's a beauty. There's a lot of stocks coming back right now. Let's see if it's ready. Let's put a VWAP on it right here. Yep. You're above the VWAP. Now you see what I'm doing right now? I'm going to give you guys a little class on this right now. Okay. I'll give you guys a little course, and I'll tell you a story of how I taught this to Richie with his favorite stock. Remember Richie? Coach TP, is it TPR tickers? Yeah, Coach Tapestry. So I'll give you guys a little lesson. So we got a good little watch list. I'm very encouraged by the fact that chip stocks are coming back and bottoming out at the 100-day moving average. I'm liking what I'm seeing. Here's the problem, folks. CF has supply issues out of Israel. News drop. Let's see. CF news drop. Not really anything crazy here. Yeah, it's again, and kind of Adam kind of brings me back to my point that ooh, look at you, Jeanette. That's a nice testimonial right there. Me too,
Roger,
Jeanette.
I'm going to ask that you close the chat.
Yeah. I'm going to close it. I just saw that one and I was like, ooh, that's a good one.
You're getting
right there.
distracted. We got a lot to cover. Let's go.
We do have a lot to cover. We do. Let me just put this here. And all right. So let's talk about VWAPs and anchored VWAPs. So just to review a little bit of what I talked about yesterday, okay? Yesterday, I explained the importance of VWAPs, and the way I explained it to you guys, and this is really, 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 really important, okay, is you need to understand that majority of indicators, RSI, MACD, Bollinger Band, stochastics, they don't take volume into account. They just don't. One of the biggest reasons why they don't take volume into account is because these indicators were never designed, tested for the stock market. Let me explain. Let me, and I need to explain this to you because if you don't understand the basis of this, you're going to have a very difficult time navigating information. And information is very dangerous when it comes to the markets. One word can send you on a voyage that will cost you your life and your savings. And I've seen people fall for that. I've seen people take a piece of information, not understand the full ramifications of it, put it into practice, and next thing they're like, "Oh shit, I did not know that." So context, information, and having full information is very, very important. So let me just take you through this so you could see for yourself. See, I'm one of those people that I don't really do well when people tell me stuff. I do well when I come to my own conclusion. I'm a stubborn beast. So when was RSI indicator created? Okay, now look at this. 1978. Okay, look. When was MACD created? Around 1977. Okay. When was stochastics oscillator created? In the late 50s, in the 50s. Now, I'm going to ask you guys an interesting question. This is the question I have for you. Do you know anybody who was not investing, but trading stocks? When did the internet become popular for trading stocks? See, mid to late 1990s. I started back in 1993 and I was still calling. By 96, I was using the internet. So I just showed you how every one of those stocks, every one of those tools that you guys love to use, they were all invented before anybody was actively trading stocks. You see, the problem was this. Before the mid 90s or early 90s, when you can just call your broker and place trades, you were stuck. You were stuck in the position where you couldn't do that. You couldn't do that. So trades were slow. So people were trading commodities. Every one of these indicators, every one of them was created for the commodities market. Let me show you again. Look. What was the RSI oscillator here created for? Wells Wilder. Now, what kind of a trader was Wells Wilder? What did Wells Wilder trade? Commodities. Commodities. You see, commodities. Okay, now look. George Lane, stochastics. What did he trade? He didn't trade S&Ps in the 50s. I can promise you that. Okay. He traded futures. Chicago, no stocks trading. There's no securities in Chicago. Futures in the 50s. Okay. Mid-America Commodity Exchange. Okay. Primary focus is on futures. Okay. My point in taking so much of my time to explain this to you is to teach you that when you're dealing with commodities, volume is irrelevant. And the reason volume is irrelevant because you're trading everything in fixed contracts. Okay. So then someone said, oh, why don't we just use these tools on the stock market? As a matter of fact, I'm going to show you something scary right now. You see bar chart? See how they have futures, currencies, ETFs, options? I've been using bar charts since the early 90s. Back then, it was just futures and currencies. Now, here's the scary part. You see these indicators right here? Every one of these indicators, or for the most part, they were still there. When this was a futures site. Raleigh can tell you that. This was not a stock site.
Nope.
This was a site solely focused on futures, not stocks. And meanwhile, none of these indicators have been changed. So it's very lazy, but it's very easy. It's very lazy, but it's very easy to just say, oh, it's technical analysis. Technical analysis just works on everything, right? It's price. Hell, we can just use the same indicators that we've been using for the last 50 years. Well, guess what? You can't, because stocks. Now, if you're just looking at price, you can. I don't recommend you do that because without volume, stocks don't mean anything. They don't mean anything. You understand? See, the smallest contract on the bond market is $100,000. You see, you don't need to measure volume. Up to a few years, up to about 20 years ago, the smallest contract on the S&P 500 was $250,000. So you didn't really need to deal with volume, but with stocks, you got to deal with volume. Now, what in the world does that have to do with what I'm saying right now? The VWAP indicator was not invented 50 years ago. And the VWAP indicator divides everything price by volume, volume and volume again. If you're not looking at volume-based price, you are completely ignoring very key levels, okay? So again, let's kind of review where yes, volume is more important than anything else. Matter of fact, you know my small cap program? We don't take a trade unless the volume of the stock is the highest it's ever been, or within 5 days of the highest volume it's ever been. Volume. Why do you think I spend the time to color code these candles? Volume, because of volume. Why do you think I spent so much time looking at market profile? Volume. At price. So again, if you're using regular technical indicators to decide when to make an entry or when to take a profit on a trade, you're completely missing the fact that you're using something that can be completely manipulated. And when I say manipulated, I mean that in every term of the word. You see this is an 8-day EMA. Here, let's look at here. This is the 8-day EMA. This just tells us right here, this indicator, see that it came down right here. Here, the average was 111.29. Here, it's 110.74. But look at the VWAP. Look at how consistent it is. This is telling us where volume is being traded. The average based on volume. It's at 110.80. And we're currently above fair value because this is fair value on an intraday chart. The VWAP is always set at the beginning of the day. Automatically. You don't need to change the anchors of it. Now, what about the anchored VWAP? Why is it called anchored? Because when you're looking at daily charts, you have to actually anchor the VWAP to a specific level. Yesterday, I explained to you that we anchored the VWAP to the beginning of the year. Okay, what date was this? What is this? January. Yeah, 1-2. Here, let's see. Is this 1-1? No, 12/31, right here. There's the VWAP right here. There's your VWAP right here. Now, let me show you guys something. And this is, again, really important. And I'm using the stock CF. I could be using any stock. But let me show you the importance of this. I just anchored the VWAP to the beginning of the year. And here's where the VWAP is. That's telling us that anybody who bought this stock from beginning of the year till a second ago is not losing money based on the average of this entire price multiplied by volume. So this is fair value, 96.86. The stock is trading above fair value, which is fine. Stocks usually trade above or below fair value. Stock trading above fair value is a strong stock. Stock trading below fair value is a weak stock. But you see how all these moving averages, and I don't use moving averages to enter or exit trades. I use them as compass, okay? But the VWAP, I look at VWAP as fair value area. So, and I by the way, I have these set on my bar charts right here, these charts right here, because I use these when I analyze these stocks in the morning. So you could see right here, CF. Let's just go to CF. Okay. There's the VWAPs right here. There's the VWAPs right there. Here. VWAPs right there. 97, 96 something. And you could see it right here. 96 something right there. Now, why do I have two here? One is anchored to the beginning of the year. I'm just giving you a summary of what we covered yesterday, because a lot of people were like, you went a little too fast. You were kind of talking about so many things. So you could follow these two lines, the green and the pink line. You could see right here, one starts at right here, beginning of the year. right here, right there. One starts there, and one starts a week earlier. Now, in theory, they're both supposed to start one beginning of the year, one beginning of the quarter. Well, beginning of the quarter and beginning of the year is the same date, right? It's the same quarter. So what I like to do is I like to go back a week to option expiration. You see this date right here? That's option expiration. And I like to set it to the quad witching dates. There's 4 dates. And you can look them up here. Look, quad witching dates. There you are. So don't come running to me and say, what are these dates? They're right here. Here, I'll post them for you, okay? Here they are on Telegram, on YouTube, and here they are on, where's my thing? I don't even have my chat open. There we go. Here, let me post them for you. Raleigh's got me trained well. I don't even have my chat open. There we go. So I just posted it for you guys on chat, and then I closed it again. So again, you get, it's the wrong one here. Here we go. Here you go, YouTube people. You can enjoy it on YouTube as well. Okay? There you go. Don't say I don't take care of you on YouTube. Okay. So going back to this chart. Well, Roger, what is the significance? We know where you said them. We know that's price-weighted price. What is the significance of them? Well, let me show you. If the VWAP is above the 50-day moving average, right? And price comes back to the VWAP and bounces off that VWAP, that means price is bouncing above fair value. Also, it means that if you want to take a certain price point and you want to ask yourself, is everybody who invested from this point to this point as a whole, are they making money or not? You can connect the VWAP to it. So if this VWAP, if price drops, for example, let's say price drops right now, right here. Right here. That's going to tell us that anybody who bought between the first of the year and now is slightly negative. But remember, I drew it right here, not here. This is still the beginning of the quarter, previous quarter, or end of option quad witching. As long as price stays above here, we know that everybody who bought between option expiration and last option expiration and today is still profitable. Now, these levels become very important. They become very strong support and resistance levels. Because if price right now on CF, and I'm just using this as an example, if price on CF falls below these levels, we know price is now that every one of these people, every one of these as a whole is at a loss. And why is that important? Because if the VWAP is near a very important level, and you know that all those people are at a loss, that puts pressure on the asset you're looking at. That's psychological pressure right there. Okay. So for example, let's say the VWAP is below the 50-day moving average. Okay. And price goes through the 50-day moving average. Well, you can argue it's still above the VWAP. So you don't have that many bag holders. But if we go past the VWAP, now we're going to have bag holders. Remember, these moving averages are your compasses. This is telling us if you're facing north, east, west, south. These are actual price levels with volume. So they are much more stickier. Understand?
So, Roger, quick question at this point in time. You're plotting two VWAPs. You've got the annual and the quarterly. Why are you plotting both of those? Wouldn't one be sufficient? Or
well, if I was you, okay. Well, here's the thing. That's what I said a few minutes ago. I said if I was using the beginning of the year for the first quarter, then one would be sufficient for the first quarter. Then obviously I'd have to add more because beginning of the year and March or April are different. But because I'm using quad witching, they're actually 2 different levels. Because I'd like to see the level. I would like to see the difference between the quad witching and the beginning of the year, because they kind of track each other and sometimes they go off. And I like to have both of those levels there because that's one of the biggest events of the quarter, quad witching. So if I can kill two birds with one stone, I want that there. You want to attach your VWAP to very important price levels. Beginning of the year, beginning of the quarter, and now let me show you the last one.
Okay.
Okay.
So do
So
they
I
work?
find
They
that
work in they work in tandem with one another because what some people are wondering is like the quarterly VWAP something that's more important to pay attention to?
Not more or less. They're not more or less important than each other. They just tell you from whatever level you've pointed them if there are bag holders or not.
Okay.
So it just depends on the level. If you tell me right now, if, for example, let's say this price falls below this blue line, we know that everybody who bought CF between beginning of the year or whatever we said the VWAP and right now is a bag holder. That would influence how I'm looking. That would influence how I'm looking at price action. Okay. Now, let me show you specifically how we use the anchored VWAP in Quick Strike. Okay. That's the program that I'm going to be talking about shortly. So what we do is, remember, we set the VWAP at beginning of the year, beginning of the quarter, which is right here. But one of the other things we want to do is we want to set the VWAP at the highest value areas and the lowest value areas, because those areas have they have a big influence on the market. So let me just take a different stock. Let me take this stock here. So this is the highest level of the last 90 days, or actually, this is the highest level of the last 90 days right here. Okay. Now let me go back to the lowest level of the last 90 days. Right here. Right there. So let's just assume, okay? Let's just assume for a second. So here's one level and here's another level, okay? Let's assume for a minute, let's make an assumption that price is not going to go up right now on this stock COHR. That price is going to stay in this area right here between this channel and this channel. What will eventually happen is price will start consolidating here, and this area here. Let me take a screenshot of this. Okay. See these, and price is here, right? And it keeps going like this, and it keeps going, and eventually pops here or here, right? And then we know that anybody who so listen to the words coming out of my mouth right here. This is really important. If price breaks out up here, back here, considering this is the VWAP right here, anchored right here, we know that everybody who bought from the highest point in the last 90 days as a whole, all these buyers right here are in profit. There's no bag holders from the highest point in time. Now, why do people like to buy all-time highs? Can anybody tell me? I'm not going to open the chat. I think it's pretty explanatory. Why do people like to buy all-time highs? It's not a trick question.
Yeah, basically people are saying because there's no real overhead resistance.
Right. Yeah, blue sky, right?
Yep.
Blue sky. Okay. So let me ask you this. Now let me ask you this question. If we take the highest high, and we are now trading above the highest high based on volume, what does that tell us? The same thing.
Same thing.
Clear blue skies. You see, folks, when you're looking at price, right? When you're looking at price, let's say this is a stock chart and this is price, and this is an all-time high, okay? And you buy and you're like, yay, I bought at an all-time high. Sure you did. Here's what you don't know. 1 million shares bought here 5 shares bought here. Do you still thinking you're buying at the all-time high? Ah, if you're not going, then you're not understanding what I'm saying right now.
Mm-hmm.
Do you guys understand? You think you're buying at an all-time high, but what you don't know is 50 times more volume came here than here. So you're not really buying at an all-time high, because when you average in the volume that way here, there's way more volume here than here. So price is making all-time high, but you got a bunch of people sitting here going, whew, we finally broke even. Do you guys understand what I just showed you? The VWAP is a real volume. So if I put a VWAP at a swing high of the last 90 days or the highest high, and price breaks above the VWAP, that means cumulatively, all the volume that came in here is now at a profit right here. That means
Right
there's
there.
no bag holders. That means blue skies. See, look, you're looking at price without volume. Price goes up, 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 up. Roger, here, look. Let me make a clean chart. Let me just get a clean chart. I want you guys to understand this because I don't think a lot of you understand this. So look, stock is going up based on the price. Here, look, $70, $80, $90, all-time high. Blue skies, okay? 50 shares bought here, 10 shares bought here, and 5 shares bought here. Okay? If you were to average this price by volume, it wouldn't look like this. It would look like this. Price wouldn't be able to get above this level because this is where the most volume occurred.
Right.
Okay.
I like what Ken just posted. He said, the price is technically at an all-time high, but the lack of volume really diminishes its effect.
See, what's the point? What's the point of price being at a certain level if you have a line full of bag holders behind you?
Mm-hmm.
You understand? So what this does is it tells us when we have clear skies based on volume, not price. Price and volume. So to give you a real scenario, Richie and I, this was like a year, maybe more than a year ago. I don't know. It was somewhere around here. Oh, I don't know. It was somewhere in this area right here when TPR was trending really well. And yeah, TPR. Yeah. And let me just use a different stock that looks like TPR looked back then. Okay. It'll demonstrate it better. COHR. It looked like this. Looks just like this. Okay. And it was a trade just like this. And Richie got into it somewhere right here. And he's like, I'm going to get out right now. And I took the VWAP and I wrote and I sent it to him. I said, look, and price was like right here. I said, Richie, everybody's getting into this stock. You have no overhead resistance. You should be doubling in right now, not getting out, but doubling in. And he listened to me and he made good money on it. But you see, if you take this line away, if I take this line away, see that? I just took it away. Do you know anything about this level? No. But if I put a VWAP here, and that is the highest point in the last 90 days, that's what the quick strike does. It tells us the price level where all of that inventory, all of this inventory right here, see all of this inventory right here? When price gets above this level right here, this little line, 266.86 as a whole, this inventory is, these traders as a whole are all profitable, which means it's the same thing as buying right here above the high without having to go that far. Does anybody not Richie says I've made so much money on that pattern after that lesson. You did. Yeah. Does anybody not understand what I just said? Does anybody not understand? Okay. This is an all-time high. I don't know if it's an all-time high. Just pretend this is an all-time high. Okay. I'll give you one more example with this. Okay. This is an all-time high. If price right now, here, all-time high price is 299.09. Let's say price right now is at 300. Okay. It's above this level right here. If you buy right here, you could clearly say, hey, I bought at an all-time high. There are no bag holders above me. There's nobody that could sell to me. Everybody anybody who owns this stock is at a profit right now. Okay? All right. When you're here, you're not at an all-time high. So you have these 3 days ahead of you. You could say, oh, there's a lot of resistance right here. I'm going to wait till I get above this level to buy. Because these three people are sitting here saying, hey, we're losing money. We have to sell to somebody. Because look, price is at 272 and we bought at 298. We're 20 points down. So you're thinking to yourself, I don't want to buy here because if I buy here, these three guys, these Manny, Mo, and Jack are going to sell to me. And they're going to be selling. But if I wait till price is up here, there's not going to be anybody selling to me. If I wait till prices up here, there's no sellers. Capiche? What I'm explaining to you is that's not how it's worked, because when you do that, you're just taking price into account. When I use the VWAP, I can put my VWAP at that high level, and this thing calculates all the volume and the price that was created here. And what this is telling us is based on all of this volume that's here, on average, there are no bag holders, not all the way up here, but just down here. This is telling us that when we get above 267, everybody who bought from this point here is in profit on average. Do you guys understand the value of that? That means there's no bag holders beyond this level. You don't have to wait till you're all the way up here. There's no bag holders from here. That's what the VWAP, the anchored VWAP tells us, which is why we put it to the highest 90 and lowest day. Now, I'm going to give you guys a class right now that will show you some demonstrations of this and explain this in a completely different way. I'm going to spend half an hour on it, and I highly recommend you guys pay attention. This is going to be very, very important. And if you haven't had that aha moment yet, then you're going to have one right now. Now, Raleigh, I'm going to have to reshare my screen because I don't want to share. I'm going to make this a little smaller for myself. It'll just take a second. Yeah.
Yeah. And I want to let the people know that are with us here on YouTube. We're about to go ahead and stop the stream to YouTube because YouTube does not permit us to do a promotional event like the one we're about to do. So from that standpoint, if you're in YouTube and you would like to be a part of the rest of this presentation, please come on over to our Zoom room.